AI Black Swan, the day AI scared Wall Street, inside the $285 billion crash that no one saw coming. How a rogue algorithm vaporized $285 billion on Wall Street. A 1.43% market plunge no one predicted. Uncover the inside story of the AI glitch that shook global finance. February 4, 2026, a day that will live in infamy for the global tech sector. A digital tsunami, dubbed the SaaSpocalypse, wiped out $285 billion in market capitalization in a single trading day. The Nasdaq plummeted 1.43% as panic selling gripped Wall Street. What triggered this sudden, massive sell-off? The S&P Software Index crashed 15% in 1 month, a freefall unseen since the dot-com bust. The speed was breathtaking. Suddenly, software stocks dropped 6% in a single day. Traders scrambled, whispering about AI eating software. RELX, owner of LexisNexis, saw its shares plunge roughly 14%. Was this the end of software as we knew it? The Nifty IT index in India wasn't spared, losing 1.9 Indian rupees to 2 Indian rupees lakh crore in market value. Accenture executives reportedly held emergency meetings. Bloomberg terminals flashed red across trading floors. Analysts at Goldman Sachs issued urgent warnings. The fear was palpable. Investors dumped shares of Salesforce, Microsoft, and Oracle. Even established players like SAP experienced significant losses. The SaaSpocalypse had arrived. The question on everyone's mind, could anything stop it? The backstory: industry analyst explaining context and background. At the heart of the AI-driven disruption lies Claude Cowork, Anthropic's revolutionary AI agent platform. Unlike previous AI models, Claude Cowork is agentic, capable of autonomously executing multi-step workflows on a computer. What exactly is Claude Cowork, and why is it so different from previous AI technologies? Anthropic, founded in 2021 by former OpenAI researchers, has always prioritized AI safety and interpretability. Their focus has been on creating AI systems that are not only powerful but also aligned with human values. Claude Cowork is the culmination of years of research in this area. It is not just a chatbot or a language model. It's a digital employee, capable of handling complex tasks without human intervention. The difference lies in its ability to reason and plan. Previous AI models could generate text or answer questions. Claude Cowork can analyze data, make decisions, and execute actions. Imagine an AI that can not only write a marketing report but also automatically implement the recommendations within that report. This is the power of Claude Cowork. The Swedish Armed Forces recognized this potential, signing a 9-figure agreement with Planet Labs to leverage AI-powered geospatial analysis. But the implications for the software industry are far more profound. Suddenly, the need for armies of programmers and consultants seemed less certain. Google's aggressive investment in AI infrastructure further fueled the fire. The tech giant plans to spend $175 to $185 billion in 2026 alone. This represents a 50% increase over what Wall Street anticipated. Google plans to spend nearly double what it spent in 2025. This commitment signaled a massive shift in the competitive landscape. The market reacted swiftly and brutally. Indian IT giants Infosys and TCS experienced sharp declines as investors questioned their future relevance. Could these companies adapt quickly enough to the new AI-driven reality? The fear was that Claude Cowork and similar AI agents would automate away entire categories of software development and maintenance work. The revelation: investigative journalist uncovering hidden patterns. The initial market panic was fueled by a very real fear: job displacement. Early data suggests a significant impact, with entry-level developer roles plummeting by 40% in the months following Claude Cowork's release. The implications rippled far beyond Silicon Valley. Suddenly, the promise of a stable career in coding felt precarious for millions. Was this a temporary shock or a fundamental shift in the nature of work? Gartner analysts predicted a 20 to 30% reduction in customer support roles by 2026, further amplifying anxieties. Companies like Zendesk and Freshworks saw their stock prices fluctuate wildly as investors digested this information. the narrative shifted from AI as a tool to AI as a replacement. The impact wasn't limited to entry-level positions. Tasks that previously required 100-plus people could now be accomplished by small, highly specialized teams. This efficiency gain, while beneficial for corporate bottom lines, translated into widespread job losses across various sectors. A new class of jobs emerged: AI architects and prompt engineers. These roles demanded a deep understanding of AI systems and the ability to effectively communicate with them. Prompt engineering, once a niche skill, became a sought-after qualification. But could these new roles absorb the displaced workforce? The rise of AI also accelerated the trend towards full-stack development. AI makes narrow specialists obsolete. Developers were now expected to possess a broader range of skills, blurring the lines between front-end, back-end, and database management. This shift placed immense pressure on individuals to constantly upskill and adapt. February 2026 witnessed AI reasoning systems doing work in seconds. Tasks that previously took days or weeks were now completed in a fraction of the time. This speed and efficiency came at a cost: the erosion of human expertise and the devaluation of traditional skills. The shift wasn't universally negative. Some argued that AI would free up human workers to focus on more creative and strategic tasks. Others believed that it would lead to a more equitable distribution of wealth. But these optimistic views were often drowned out by the chorus of fear and uncertainty. The reality is complex. The job market is not simply disappearing, it is transforming. The question is whether we can adapt quickly enough to navigate this transformation. Are we facing mass unemployment or a transformation of the job market? The speed of change is alarming. Companies like IBM and Tata Consultancy Services are scrambling to retrain their workforces. Universities are revamping their curricula to focus on AI-related skills. The pressure to adapt is immense. The AI-driven disruption was not just a market correction, it was a wake-up call. It forced us to confront the uncomfortable truth that AI is not just a tool, it is a force that is reshaping our world in profound and unpredictable ways. The future of work is here, and it looks very different from the past. The contrarian view, contrarian economists challenging the mainstream narrative. While the AI-driven disruption painted a bleak picture, a closer look reveals a more nuanced reality. For those who embrace AI, productivity is soaring, with reports of 50% plus gains in various sectors. The narrative of widespread job losses conveniently ignores the burgeoning AI training and integration industries. Isn't it odd how quickly the narrative shifted? Nvidia, despite initially falling 12%, quickly rebounded as demand for its AI chips skyrocketed. This suggests the market wasn't rejecting AI, but rather re-evaluating which companies would truly benefit. Adobe, another casualty, saw its stock recover as it integrated AI features into its creative suite. The market overreacted, plain and simple. The panic stemmed from a misunderstanding of AI's capabilities. The fear was that AI would completely replace human workers, but the reality is that AI is more likely to augment human capabilities. Consider the rise of AI whisperers, professionals who specialize in prompting and guiding AI systems. This is a brand new job category. Predictions of mass unemployment are premature. Yes, some roles will be automated. By 2025, we might see 40% automation of entry-level developer roles. Customer support might experience a 20 to 30% reduction by 2026. But this doesn't mean those workers will be unemployed. It means they will need to adapt. The speed of change is undeniable. The game changes every 6 months. But humans are adaptable. The narrative of doom ignores the potential for innovation and creativity. What about the new businesses that will emerge, powered by AI? The cost of entry is also lower than many realize. AI reasoning systems are available via monthly subscription, making them accessible to small businesses and individual entrepreneurs. This democratization of AI will lead to a wave of innovation. Salesforce, despite its initial dip, is now offering AI-powered tools to its customers. Microsoft is integrating AI into its Office suite. These companies aren't dying, they're evolving. The market's knee-jerk reaction was a gross oversimplification of a complex situation. Were investors blinded by fear? The AI-driven disruption was a market correction, not an extinction event. It was a reminder that technology is a double-edged sword. But for those who embrace AI and adapt to the changing landscape, the future is bright. The futurist and strategist synthesizing a forward-looking thesis. Looking ahead, the AI-driven disruption serves as a stark reminder that the AI revolution is not a distant threat, but a present reality. Within the next 3 to 5 years, billions of AI agents will be integrated into our daily lives, conducting business, managing finances, and even providing legal advice. How can we prepare for this new world? The initial shock of February 4th should serve as a wake-up call. The decline of 5 to 7% in Infosys, TCS, HCL Tech, LTI Mindtree, Coforge and Faces stocks indicates a broader shift in the IT services landscape. Individuals and organizations must prioritize AI literacy. Follow XyLex for AI survival guides, offering practical strategies for navigating the AI-powered future. The rise of AI tools like Claude Legal Assistant, a role-specific plugin for legal operations, demonstrates the potential for AI to augment and even replace traditional roles. But what if the AI makes a mistake? The legal ramifications are still unclear. Companies like Google and Amazon are investing heavily in AI research and development. They recognize that AI is not just a technology, it's a fundamental shift in how we work and live. Will they dominate the AI landscape, or will smaller, more agile companies emerge as leaders? Embracing AI is no longer optional. For those who embrace it, AI boosts productivity by 50% plus. This advantage will only widen over time. Consider the implications for education. Are our schools preparing students for a world where AI is ubiquitous? The ethical considerations are paramount. We must ensure that AI is used responsibly and ethically. Bias in AI algorithms is a serious concern. We need to develop frameworks for auditing and mitigating bias. The AI-driven disruption exposed the fragility of the market's understanding of AI. The panic selling on February 4th was a clear sign of this. Investors need to educate themselves about AI and its potential impact on various industries. The future is not predetermined. We have the power to shape it. By embracing AI responsibly and ethically, we can create a future where AI benefits all of humanity. The next 12 to 18 months will be critical.